Have you ever found yourself standing at the petrol pump or looking at your grocery slip and just thinking, why is everything getting so ridiculously expensive? Well, you're not alone. And today we're going to dive into a story that might just hold a piece of that puzzle. We're breaking down how 28 major banks allegedly manipulated the South African rand and what that actually means for your wallets. Right. Let's start with that massive question that's on all our minds. Why is everything so expensive? We need to connect this pretty complex financial story directly to our everyday lives. I mean, it's the question, isn't it? It feels like every single month, our money just doesn't stretch as far as it did before. And you know what? It turns out this isn't just in your head. It's a real, measurable thing. Think about it. Higher fuel prices, your food bill going up, rising unemployment, and steeper interest rates on any loans you might have. These aren't just a bunch of separate, random problems. They're all symptoms of the same illness. They're like dominoes falling one after another. So today, we're going to look at what or who might have pushed over that very first one. And that brings us right to the heart of it all, the weakened rand. Let's really dig into how the value of our currency has a direct, and I mean direct, impact on our daily lives. So how is the rand's value supposed to work? Well, it operates on what's called a floating exchange rate. The easiest way to think about it is like a giant global marketplace. The price of the rand goes up or down based purely on supply and demand from thousands of players, investors, banks, you name it. The whole point is that it's meant to be a free and fair system. And here's where it hits home for you and me. When the rand is weak, it literally takes more rands to buy things that are priced in, say, US dollars. And since we import so many essential things like our fuel, the wheat for our bread, and pretty much all our electronics, a weaker rand means higher prices on the shelf. It's a straight line, no way around it. Okay, so if the market is supposed to be free and fair, what the heck went wrong? Well, this is where we get into the core allegation of this whole story, a secret, coordinated effort to rig the entire system. And look, we're not talking about a one-off bad day on the market. The accusations cover a full decade. A decade. From 2007 all the way through to 2017. For 10 years, this group of incredibly powerful players were allegedly working together, behind the scenes, pulling the strings. And who exactly are we talking about? A group of 28 banks. And it's a real mix. Some are local South African banks, others are huge international institutions. The accusation is that they formed a kind of pact, a cartel, to work together to manipulate the value of the rand against other currencies for their own profit. To really grasp the kind of power this group allegedly had, you just need to hear one number: 1 trillion rand. That's the estimated value of their combined transactions in the currency market every single day. It's an amount of money that's just hard to even imagine. Now, to put that 1 trillion rand into perspective for you, that is more than a quarter of South Africa's entire annual economic output. That's the country's GDP. That is a staggering amount of financial firepower to be able to aim at a single target. Okay, so the big question is, how did they actually do it? I mean, how do you manipulate something so big? Let's break down the mechanics of this alleged scheme. All right, the first tool in their toolbox is something called short selling. Now, in simple terms, this is basically placing a bet against the rand. The banks would sell enormous quantities of rand that they didn't even own, and that action alone creates this huge downward pressure on its price. The second piece of this puzzle is what's known as the spread. You see, there's always a tiny difference between the buying price and the selling price of a currency, and that little gap is normally how brokers make their money. But the allegation here is that these banks also colluded to fix this spread, pretty much wiping out their own trading costs so they could maximize their profits. So let's put it all together. It's almost like a 4-step playbook. Step 1, you form a pact to combine your 1 trillion rand a day firepower. Step 2, you use that immense power to short sell the rand, forcing its value down. Step 3, you fix the spread to make sure you profit as much as possible. And then finally, step 4, and get this, they were allegedly able to hold the exchange rate completely still for short bursts. We're talking like 30 seconds, just long enough to execute their trades at the absolute perfect price. It was a whole system. So now that we've seen the how, it's time to ask the most important question. So what? What does all this actually mean? This is where we see that domino effect play out in the long term for the entire nation. And to really get the long-term damage, you can think of it like this. Just like you and I have a credit score, a whole country has one too. And that score basically tells the rest of the world how safe of a bet it is to invest their money here. Now, if you have a good rating, investors are lining up, and it's cheap for the government to borrow money to build things like roads and hospitals. But a bad rating, what's often called junk status, well, that does the exact opposite. It scares investors away, and any money the country can borrow comes with a much, much higher price tag. And guess what? A weakened, manipulated currency is a massive red flag for the agencies that decide these ratings. And right here, this is you watching those dominoes fall, one by one. A weak currency contributes to credit rating downgrades. Those downgrades lead to a stagnant economy because investment dries up. That, in turn, leads to higher interest rates for every single one of us, rising unemployment as businesses can't grow, and ultimately, government budget cuts and poorer services. It's a devastating chain reaction. You don't have to take my word for it. The source material for this explainer sums up all that damage in just 3 powerful words: crippling economic outcomes. That really says it all, doesn't it? It just underscores how severe and long-lasting these consequences really are. So, if you take one thing away from this whole story, let it be this. This isn't some abstract story about numbers on a screen or complicated financial trading. When a market is allegedly manipulated like this, it has real-world, tangible consequences that are felt by every single person every single day when they go to the grocery store or fill up their car. Which leaves us all with one final and really important question to think about. When a market that's supposed to be fair and open to everybody is secretly controlled by a powerful few, who really pays the price in the end?